Hello, ladies and gentlemen, and welcome back to another video. It's time to start paying attention to GME stock. And first things first, this is not financial advice, never will be financial advice. I am not a licensed financial advisor, never will be, and this is strictly opinion commentary only. With that said, understood and out of the way, let's dive into a jam-packed video, starting with the topic on X of the past week and change. Is Richard Newton hacked? Oh my gosh, Richard Newton's hacked. He's not hacked. There's just simply no way, shape, or form in which I believe Richard Newton was hacked. Let me know what you think in the comment section below. I'm touching this not because I have definitive proof or this, that, and the other, but he's literally posting on his X account with tagged cards with the date written on it in his style. Salvation cards. I mean, it's the same thing. He literally linked to his website on his X where he's doing the same thing. And just because he's posting tinfoil, by the way, does not mean that he is going off the rails or off the deep end. I think anyone that's been following price action over the last month and change on GME, and I'll pull out the daily chart for you guys if you're not watching the chart like a hawk, like I am, but this has been terrible. And starting from really, I mean, it was kind of bad here too, but let's just say October 2 all the way to here, one calendar month later, just terrible price action, 20% down, which really for GME, it's not a lot. Okay. But just all intents and purposes, bad price action. Now he's kind of spinning around on tinfoil. Richard Newton is. It doesn't mean he's hacked. The crypto thing in his bio, it's not, no one's making anyone purchase that. It's simply his way of saying he might have cracked the code on Roaring Kitty or what Roaring Kitty's doing or trying to say. That's my opinion on the matter. Let me know what you guys think. Again, this is just, I think it's ridiculous that people are just assuming because he's posting more frequently or he's posting memes. He did that, by the way, the same exact time last year in 2024, if you guys were following then. So I don't think he's hacked. I think it's anyone that's accusing him of such, I think, it is living in some sort of echo chamber where people are freaking out about everything about GameStop. The thing I want to make super clear, and we've got other crazy topics of this video, real quick, teasing, Roaring Kitty, potential new drawing on Robinhood one tick chart. We'll save that for the end of the video. Some really interesting market reform type stuff uncovered on Reddit. Options activity for this week, and an update, I think, on the general model. But first things first, I think people suggesting that it's dangerous to spread that kind of stuff without proof. Richard Newton has posted photos of himself, posted his daily written notes, claiming that it's him. So I think and it's quite easy. If you get hacked, I think it's quite easy to go through a different source or, find someone to put out the message that you were indeed hacked. So anyway, let's put that one to bed for now. Can always update later on if, we get differing info, but that is the stuff now. Now, what is going on with GameStop? Why is it still stuck in the mud? Well, the GME model, which we'll pull up a little bit later, suggests that this could be a good week. Order flow wise, there's not a whole lot going on. But broader speaking, the price point which GME is at now, $22.25. That is one of the lowest points it's been, and you can see over the last 3 or 4 months dating back to early June. It's touched this line once, twice, 3 times, 4. This will be the 4th time it touches it. And I'm not saying it's time to pay attention to GameStop because we're going to get some massive squeeze, but when it touches this line, it normally has relief, and it might be small. It could be rather large. It could be whatever. We saw 27% pop up. And really over the summer, when we were in the middle of swap season, we had a little relief here up in there, 5, 10, 15% little rallies, but nothing substantial. Nothing, I think, what everyone's hoping for on this stock. But you can go back further and see when it touches this point, something mechanics-wise, and I'm sure it's fails to deliver on ETFs, comes through and it rips, absolutely rips. You can say, oh, it's earnings, oh, it's this and that. But we've seen 60, 70% rips off this same spot. Let's go back to a similar point last year, almost 1 year ago exactly. This point was the beginning of a 55% move up. So if we did have something similar this year, again, just theoretically, we'd be in the mid 30s again. and it could happen quickly. I'm not changing my drawing. I think this week we're going to get some really good price action. But again, there's some new posts on Reddit which we can look at where there's a person that is really unpacking the circumvention of rules, particularly to ETF create to lend mechanisms. And then that is causing fails to deliver on GameStop. Now, I'm not going to read through this whole thing because I think a lot of people are going to check out on it. It just kind of put it on the back burner, even though this is very, very important stuff. This person is basically regurgitating the fact that there are so many rules in place, specifically under Reg Show Rule 204, that transactions qualify for extended settlement exceptions, allowing authorized participants to generate synthetic liquidity for short sellers without resolution of fails to deliver. So, you can see that people on Reddit that are much smarter than I am, that are much more, I don't know if they're securities lawyers or not, but they're much more understanding of how these mechanisms work and the rules behind them. I think it's fascinating that people are looking into this. Highly recommend looking at Long Settings profile here on Reddit. They also put another one out on the overlooked mismarking of short sale orders under Regulation Show Rule 200. And this is Section G, I believe. So it's all under Reg Show. It's all under settlement. These are all legit mechanisms per the rules. These are per the rules. And they're not claiming that, these market makers or APs are going against the rules necessarily. They're just saying that these rules can be abused and are being abused. So whatever's going on with GME now, I think we're going to pull up some swap data here and probably blame a swap that Richard Newton's model missed. And this is not critical of Richard Newton at all. In fact, I credit him a great deal for my kind of renewed investment philosophy when it comes to GameStop. Just a quick note on that. I think before I watched Richard Newton's videos a lot, I was a bit more of a, full scale short squeeze type guy. And I'm not saying that can no longer happen, but I think Richard Newton enlightened me to selling covered calls, in the name of trying to get more shares of GameStop. And, we're at a price point now, $22.18. I can't even believe I'm saying that. That's right around where Ryan Cohen bought this time in early April, where GameStop proceeded to rip 70% from there. Roaring Kitty's last known cost base is $23.41. We're well below there. So I think it's almost a bit of arrogance by the APs or market makers or whomever needs these swaps, which, by the way, another kind of cat in the bag here, must be extremely high notional for them to be going through these lengths to slam GameStop down like this on zero news. But if we pull up this swap chart here, this is from, I wanted to get their name, Love to Burst on Superstonk. Now, this data, as I've said before, swap data is extremely hard to dig through. You basically have to be a computer programmer to get this data from the depositories. But large notional new XRT swaps usage continued every single day this past week. So that was the last week in October. Double 250 plus million notional whammy on October 30th. And why is that significant? Well, on October 30th, it looks like Tesla's getting some good price action, by the way. I just got an alert for that. That would have been T plus 33 on a very interesting date. So Monday, September 15, large fails. T plus 33 falls on October 30th. So did they kick the can through swaps? Potentially. And I think that a $250 plus million value would be indicative of that. Now, if we pull up XRT fails, specifically around September 15th, and I am using the T plus 33 closeout logic, by the way, but this is crazy. If you're not paying attention to this video, pay attention and lock in right now. September 15th, $126 million worth of XRT FTDs. This was the largest since before Roaring Kitty was back, well before Roaring Kitty was back. I mean, look at the chart on Fintel. I'm on GameStop. Let's pull up XRT. And you're going to see some nutso. Go to short interest, go to fails. Look at this graph. The highest fails to deliver on XRT on that same date. So $250 million swap on XRT. Did they kick the can on those massive fails that were due on the 30th? Potentially. And, I don't know the mechanism well enough to suggest, are they kicking it for 1 year? Is this a 6-month deal? Is this, I don't know. But clearly that's a large amount of premium that they're putting on that. Now, another couple of tidbits from this. There's a still open swap with $250 million plus notional. That increased by 2 last week. So 2 potential swaps. That would be $500 plus million if I'm understanding that right. That is a lot of money. Now, this is kind of the reason why I think broader picture, I don't like playing shorter dated options, is because I am not a securities lawyer. I am not an SEC rules lawyer. I don't know the rules as well as other people do. Clearly, I rely on Superstock for people much smarter than me, like I said, to interpret them. But if they can kick the can through swaps on these FTDs that are due, or recycle them through other various ETFs at different places in time, well, then if you bought short dated calls, you might be on the outside looking in for any of these dates. That's why I don't like hype dates. When it comes to tinfoil hype dates, I do not, and never will make financial decisions off of them. But if you go back to the broader point of this video, which is time to start paying attention to GME now, that's not financial advice. That's strictly just saying any potential upside. There's a gap here that's 35% up on GME. Well, if you put in a trade here, you put in a buy order. If I do this here and I get 35% up, that's a really strong trade, and that could be in a relatively short amount of time. So let's go pull up the model now, see what it's saying for this week's price action. And then lastly, like I said, we'll get to Roaring Kitty's potential drawing on the Robinhood 1-tick chart. So this is the model. It's being updated by someone on Superstock, and they put new inputs in to show that now we are in another suspected swap season. Now, that's a bit obfuscated and kind of ambiguous as to the fact of how long this could last, but their model is showing relief up to the $26 level and potentially even up to 25, multiple touches over the next few weeks. Now, again, this is not, and I repeat, not a set in stone by any means. You can just see here, however, that this green line on the chart on this model, this is the swap line. When you are outside of swap season, you can expect some actual price discovery with ETF FTD settlement. And this is the time from April to, it was supposed to be July. Ryan Cohen, obviously. And look, I mean, people say Ryan Cohen killed this and that. Okay, he probably shortened it a little bit. I think that's fair to say. That's fine. But this is where we got that big run up to 35, or actually I think it touched 37 in pre-market, but you can see the green line is higher. That is outside of swap season. That's where you see the good price discovery. Now this user inputted swaps for the remainder of this calendar year. I don't know if they found data to support that. The model still suggests price discovery and some ramp ups to 25 or 26, but nothing crazy. The data, however, which you got to give it a second to load here, is still saying there's some pretty good fails to deliver kicking around in the system. And that would be this grouping here, the last of which would be coming off of, looks like 922, which would have been the red swap low. A very big allotment there from the ETFs, and a little bit before that from 918 or 919 as well. There was a good pocket there. Now, we didn't see much from that batch that was due October 30th. What we did see, and I don't know, let me know in the comments if maybe you guys think differently, we did see this little blip up here, which it was about 10%. That just doesn't seem to me like ETF clearing of fails to deliver. That doesn't seem like a lot of creation and redemption leading to repurchasing of the underlying. In this case, we obviously know we're talking about GameStop. Let's look at the ETFs, though, and look at the creation and redemption that's been going on, especially last week. And now, I typically am under the belief that creation in ETFs usually precedes runs up in price. We did get kind of net positive creation last week, minus on October 24th, a pretty big minus day, but otherwise it looks good. Now, they blew up XRT again down to 3.01 million shares. That is a significant number, guys. look how infrequently it gets there. We've seen it dip to 2.94 back in October, 2.69 in September. So when they really want to short GameStop, that number gets super low. And we saw some crazy shorting activity in definite swap season in August in XRT. But that, to me, suggests that they are really fighting to keep this thing down. So I do not have a crystal ball. I cannot tell myself because I like to make plans. I'd love to sell covered calls. I'd love to buy cash secured puts if I had the capital on this stock, or just pick up more shares or warrants in general. I don't know how long the swap season is going to last. I don't. The data still suggests that we should see some runs in price. But as others on Reddit noted, they can kick the can. So with that said, is Roaring Kitty communicating to GME shareholders via the one tick chart on Reddit? Here's a post from Solar Moonshot. Solar Moonshot has been captured in kind of all these drawings that may or may not be Roaring Kitty. Some people that don't do the tinfoil might think that this is super wacko. But this drawing apparently is a snail and a rabbit, or really, I think it's more of a tortoise here and a hare. You can see the bunny ears here. And, you know, you kind of zoom out and you see a rabbit for sure. The tortoise, it's a little convoluted, I think is a nice way of saying it. But if it is the tortoise and the hare, and this is Roaring Kitty, and I'll pull it back up just so you might need to get your magnifying glass out here. The comments are like, you know, kind of making fun of it and this and that. Lay off the stuff, you know, follow the white rabbit. Some people obviously prescribe to it, others don't. It would make sense to me if that was Roaring Kitty communicating with us that this is a slow game. It might not be, could be. You have to spend money, obviously, to do this, but Roaring Kitty, as we know, has a couple $100 million at least that we know of, maybe closer to $1 billion or more in capital. So it could be him doing this. But again, going back to if it is or it isn't, I don't think that really matters. Let's take the notion or the message, however, that it is a tortoise and the hare. I'm in this for the slow marathon business retransformation that Ryan Cohen is clearly doing. The fundamentals and the financials of this company suggest it's getting more profitable. New revenue streams and power packs are being looked at and being actually added to the business. Collectibles, 33% increase year over year. Let's continue to see that grow with the emergence of more Pokemon cards and going gangbusters for shiny and this, that, and the other. Let's see that continue. Let's focus on the value proposition of this company, which is that when this stock hits $22.13, it is close to its cash per share times 2, if not right on top of it. I think that's decent value. So I hope you guys are hanging in there. Let me know your thoughts in the comments. Are we just doomed for another few months of swap season and boring price action? Or can we bounce hard, get out of this, and is Roaring Kitty communicating with us in the chart? Hope that helps, guys. Have a good day. Go GameStop, and I'll talk to you again real soon.